Hey friends, Lucian here with the Bullish Bears team. I wanted to make this video on stop losses. So what's a stop loss? What is it? What are the goods? What are the bads of stop losses? Well, I just want to start off by just talking about in the stock market, everybody wants to make money, right? It's awesome. You get in, you want to buy stocks, you buy options. The whole point of getting in is you want to make money, right? Well, one of the most important things that people don't realize is that managing risk is more important than just making money in the stock market. See, if you don't know how to manage risk, you're not going to be able to really and truly make good money in the stock market. So what does managing risk mean exactly? Well, stock traders, the best in the world, they don't make winning trades 100% of the time. That's literally impossible because the stock market goes up and down all the time, every single day, every minute of the day. So it's impossible for even the best in the world to make 100% winning trades. Actually, in fact, some of the best in the world really only make winning trades 65 to 70% of the time. So how do they make money exactly? Well, they become masters at managing risk. So not only are they setting a goal of what they're looking to make, whether it's short-term, long-term, daily, but they're also protecting their losses. So when they get into an investment, they basically say to themselves, they're willing to lose a certain amount. And if it's past a certain amount or below a certain amount, they will not risk anymore. So for instance, if somebody gets into a $10,000 investment, they ask themselves, what are they willing to lose on that investment? But the majority of traders that are out there get in and they want to buy a stock and say, I want to make money. And they never think about how much they could potentially lose and how to protect their investment and their money when they get in. See, that's the biggest key. It's not about what you're gaining. It's about what you're protecting. And protecting your wealth is absolutely critical, no matter how much money you have. So, for instance, here, I'm using my demo Thinkorswim account with TD Ameritrade, and I just have like a live stock chart up here for you so you can kind of see it here. I'm not playing with real money when doing this video, it's just more for a tutorial. But as you can see here, prices of stocks go up and down, and they trade sideways, and there's lots of volatility in the stock market. So this video is not going to be a video about support and resistance or certain technicals or the basics of the stock market. You can subscribe to our YouTube channel and watch those types of videos. But I do want to touch on it here for the sake of purposes of this video is that it's so important to have a game plan when you get into a stock and when you get out of it. So ideally, you want to buy your stocks at support levels, base levels, and sell them at resistance levels. So you buy low and sell high. But a lot of investors get in, the newbies that are not professionals, they get in because they hear Apple is going strong. Something's going on with Apple, so I have to buy shares of Apple. So they run and they jump in and they buy the stock. Many of times they're just coming in and they're buying right up at resistance levels because, hey, Apple's going up. They're doing great. And what happens is they're left bag holding when sellers come in, they sell off, and then, boom, see what happens? The price of the stock falls. So again, stocks will rise and fall all the time, and that's why charting your stock and doing support and resistance is absolutely critical. But when you're getting into the stock, obviously you would love to get in, a stock down, Apple down here, ride it all the way up and, sell somewhere up in this area at the peak levels. So it's great to have that goal and that game plan if you're doing your stock or, if you're, buying stock and holding. But again, your game plan of protecting your losses, let's say you're up here and you're making money and you're up at Apple, what are you going to do when Apple falls down here? Are you just going to let it fall? Are you going to buy down here, let Apple go up here? Are you going to hold it? And then, let's say you're up $1,000 or $2 on Apple. Are you going to let the price fall all the way back down here because you're hoping someday that Apple gets back up to $200 or $300 a share? Because Apple is one of the greatest companies in the world. They're going to go up to $200 or $300 a share. They're going to be one of the best on the planet. So I'm going to get in, whatever. Let's say I'm going to get in here at $118 because it's going to go to $200. Well, what are the guarantees of that? What's going to happen when Apple goes from $118 down to $80 or $85 again for whatever reason? Are you going to take that big loss in hopes that you're going to gain that money back? Or will you take profits along the way or protect yourself with stop losses and always find, a different entry point? So let's say you came in down here with Apple, you could do something what they call swing trading. You could, or even just with your term trading too. You could buy Apple, and instead of holding it for 20 or 30 years, you can trade it on a yearly or a monthly or a weekly basis based upon the charts. And that's what we always suggest doing, is always taking your profit. And again, if you're willing to give a little bit of profit back because you want, your stock to run a little bit more, that's great. You can put, a stop loss in that gives you a little bit of leeway to protect yourself. So you can come in right over here with Apple and buy, let's say 102, ride it up here to $115, make a $13 profit. Now you could sell here, but you could say, well, wait a second, what if I sell here right at $115, but then Apple went up to $119 or $120? I could have made $5 more. Well, that is true. So you are going to give up that potential profit, that $4 or $5 profit. But what if you got up here and you didn't sell, and now you're all the way back down here at $104? You gave all that profit back. So with stop losses and managing risk, you can do a couple different things with it. Number one, protect your losses, but as well as number two, protect your gains. So let's say you got in over here at Apple, you wrote it up to here to $115, and you're like, I think it still has more room to grow, to run another $10 or $20, but you're like, I don't want to put too much risk out there. So let's say you had a $10,000 investment in, or let's say you, let's round down. Say you bought Apple at $100 and it's at $115 now. So let's say you were up $1,500, but you're like, hey, listen, I'm willing to give back $500 because I think I can make, up to $3 or $4 on my investment. Maybe you put a stop loss, a few dollars down, around $110. Let's see right here. This candlestick's 115. Where's $110? Maybe you put a stop loss, right around this area, $110. So you're like, hey, I'm willing for it to pull back a little bit here because it might go up further. And so what you're doing is you're managing, risk. So number one, you're managing your profits as well as managing risk. So if the stock turns against you, something like this too, let's say you get in, let's say it's not a resistance level. Let's say you're getting in, let's take, over in this area. Again, you don't want to just randomly get into stocks. That's why just, doing your proper charting and analysis is absolutely critical. But let's say you got in here, let's say it was indecision, but something was going on with Apple, and you think Apple's going up, it had some good news, you got in over here, and something happened. The news of Apple didn't turn out so great, and as you can see, Apple starts going down the past few days, right? This is a daily chart of Apple. So what will happen is a lot of people might get in at this, let's say they bought in at $112 right here. Some news about Apple didn't turn the right way that people wanted, and all of a sudden the next few days it starts selling off, and now Apple is down to $108. So let's say $112 to $108, that's $4 a share. If you had 100 shares, $100 times $4, let me do my math, I think that's 100 shares, $400, right? So now you're down $400 on your investment. And so what most people will do is they'll just let the stock ride. Hey, no big deal. I bought it at $112. Apple dropped $4, but it's going back to $200 again. Well, how do you know that? That's gambling. That's taking a risk. What if you can get a better entry point on Apple? Let's say you made a bad trade. It happens all the time. It happens to the best investors in the world. They make trades, they go against them. And what do you have to do? To be a really successful trader, you have to be able to cut your losses, walk away, and realize things turn against you, you get back in. So you may have gotten in over here, the trade turns your way, you cut your losses, you get out, and then, Apple, let's say it's about to turn, maybe you get back in over here again, and then maybe you can start to ride it up. So you always want to make sure when buying stocks, do your proper technical analysis and have a game plan. If you're a long-term trader, an intermediate term trader, or short-term trader, have a goal. There's not necessarily one right way to do it because, a long-term investor is different than a day trader, but it's still the same concept of managing risk. You manage risk differently if you're a long-term trader compared to being a day trader. So let me show you in this video here how to implement a stop loss and how it works live. So again, I'm using a demo account here with Thinkorswim. I'm going to go over to Apple and let's make a trade with Apple. So right here, I'm going to just click here and put my order to buy. I'm going to buy 100 shares of Apple. So obviously you don't want to just rush your orders when you're doing orders, but for the sake of this video, again here, I'm buying 100 shares of Apple, limit price of 109.57. As you can see, this price will probably go up and down, yeah, 159. It changes all the time. But for this video, I'm going to put my order in. I'm buying 100 shares of Apple. That's $10,968. I'm putting my order in right now. Let's see what happens. So sometimes it takes a couple minutes to fill, and there you go. I bought 100 shares of Apple right here. So this is my practice trading account. I'm making some videos, so you'll see some other ones that I did earlier today. But for the sake of this video, I bought 100 shares of Apple, and look what happened already. I'm already down $15 for the day. Actually, I bought Apple a little bit earlier on another training video. So you'll see here, hey, I'm not doing so good. I'm already down. But you could say, well, hey, I'm only down $14 on an $11,000 investment. That's not so bad. But like stock like Apple could go up and down 20, 30, 40, 50, 60 cents in the matter of seconds. So now I have my shares of Apple. Now let's say my strategy is, I'm a long-term investor with Apple. So I have my $11,000 investment. Obviously, I would love to sell it for $10,000 or $20,000 profit. But let's say I'm going to just kind of, look at Apple and hold it long term, but maybe I'll trade it every few months or, every year, depending on what happens with the charts. But maybe you say to yourself, I'm willing to lose, maximum of $1,000 on Apple. So you have to, again, you want to make that money. You want to make that $1,000 or $2,000. But again, what are you going to do to protect that investment right away? That's even more important than hoping for gains. So you might say to yourself, I'm willing to lose at most $1,000 on Apple, which would basically, if I have 100 shares, that would be about $10 per share. So $10 times 100 would be $1,000 loss. So you would look over here and, let's say you'd put a stop loss, which basically means if you have an order in with a stop loss, that means whatever you're willing to lose. So let's say you're willing to lose $10 a share on Apple. Well, you put a stop loss in at, let's say, $99. So if Apple at any point drops down to $99, your brokerage account or your brokerage company will sell your 100 shares of Apple at $99 for you. So if you're at work, you're out on vacation, you didn't realize something happened to Apple, it dropped down to $99, they'll sell it. And it'll, you sold for a loss, but at least you protect your capital because who knows, maybe that same day you might have an order in for it to sell at $99, but Apple might drop down to $80. So you would have lost a lot more if you just let your shares sit there and you didn't protect your investment. So that's where it's all about. There's not any right way or wrong way to implement a stop loss. It's just a matter of what you're willing to lose. So for the sake of this, let me show you how to implement a stop loss. Now that I have my shares of Apple, I'm going to put a stop loss in, and I'm going to go here. Every brokerage company is different. This is the Thinkorswim platform, but it's creating a closing order with a stop loss. And if you see here, I'm just going to put a stop here. You'll see sell 100 shares of Apple. This is to the market. You'll see stop loss and day. This will be only a day order, or there's a good to cancel order. Good to cancel puts your order in for a period of time. Usually it could be a few months out. So it's an open order. So instead of Apple dropping to $99 only today, if it didn't drop to $99 today, the order would cancel and your stock would be at risk still. So if you put it to good to cancel, at least that stayed open for a few months. So if Apple drops to $99 in the next few months, then your brokerage company would sell your shares. So look at this. So I have 100 shares of Apple, good to cancel, $99 stop loss. I'm going to put my order in. So this is going to say sell 100 shares of Apple, $99. And this is what I would get back in my brokerage account if it sends or if it sells. So I'm going to send the order. So now, if you go back to your positions page, you'll see there's a sell order here on Apple that's meant to sell Apple. You can see, click here, sell 100 shares of Apple. Good to cancel order. It's open. My order is open. It didn't sell. So hey, it didn't drop to 99 bucks. So that's fantastic. But for the purpose of this video, I actually want to show you how a stop loss actually kicks in and what it looks like when it does that. So let's adjust it here and let's say you were a day trader or a swing trader and you want to lose a lot less on Apple. You would just adjust the stop loss. So right now, if mine's at $99, what if I put Apple at, let's put it at $109, and let's say right now it's $109.51, or it's $109.51. Let's put one in at, let's say, 109.40. Let's see what happens when I do that. I have the order in. It didn't trigger yet, because look, it's at 109.50. It's not at 109.40 yet. So again, it's still open, but it's a much tighter stop loss. It's much less than $99. So I really am protecting my investment because I don't want to lose money on this. I have a really, really tight stop loss. And that's what the pros do. The day traders, the swing traders, they put a really tight stop loss. So they might have an $11,000 investment and they only might lose 30 bucks because they don't want to give up their profits. And that's how they become rich, is on the days that they're making $1,000, $2,000 in profits, the days that they lose, they're only losing 25, 30, 40, 50 bucks. So their gains outweigh their losses. So they can win 65, 70% of the time and lose 30, 35, 40% of the time and still be rich and make a ton of money because they're protecting their investments, they're managing their risk. So you see here, the stop loss didn't kick in. So let's make it a little bit more aggressive just to show you how it works. Let's put it up to 49. I'll put up to 50. Let's just get it to trigger and go through. All right, so I have my stop loss in. Look at this. I put it it's at 109.51. My stop loss is at 109.50. Still hasn't triggered yet. So Apple wants to be stubborn right now and go up. So let's try it again. Let's put it at 51. Let's see if it drops and goes through. Look at that. Sold 100 shares of Apple. So my stop loss kicked in. That means Apple dropped down. Right now it's at 109.52, but that split second it had dropped down to 109.51. And there you go. My shares are gone. I protected myself. So you could be, at work or on vacation. You realized, you can get a notification on your phone like, oh man, I just lost 20 bucks on my investment in Apple. That really stinks. Or you can say, wait a second, this is fantastic. I only lost $20 or whatever on a $10,000 investment. I protected my investment. I managed my risk. So that's a good thing. So again, you can use stop losses for short-term trading as well as long-term trading. It's just a matter of how much you're willing to lose. But when you get into a stock, always, it's so important to not only figure out your exit strategy when you make a gain or when you make gains, you also want to do it right away to protect those losses, no matter if you're a short-term or a long-term trader, because again, stocks will always go against you and the professionals do not win 100% of the time. So hopefully this video helped you in learning how to manage risk and implement a stop loss. If you want more training on the stock market, you need more help, feel free to click the link below and join our Facebook community, the Bullish Bears. We have a great community that loves to help out other traders. We're a collaborative community. We all share together and have a lot of fun on a daily basis helping each other out. Also, too, make sure you subscribe to our YouTube channel. Stay updated on our videos now and for ones that we've done previously on technical analysis, basics of the stock market, our previous webinars, but we also do other ones moving forward. We try to do a webinar on a weekly basis. Sometimes it's a bi-weekly basis, but you definitely want to stay in touch with us because we try to provide our followers a lot of value. So make sure you subscribe to our YouTube channel. Again, I hope you enjoyed this video. Make sure you're always protecting yourself, managing your risk, and have fun. Enjoy.